Now, stocks drifted off overnight as investors showed a little bit of caution ahead of the Fed, which will come out Thursday morning. Essentially, all of the rate cut hopes are very much priced in as it stands at the moment. Probably a little bit too optimistic overall, and that's kind of where we're sort of sitting at the moment. Is just taking a little bit of that heat back out, and at this point, even if we got a 20, I think there's still a very slim chance that we would, that the Fed may wait. We still haven't got anywhere near enough data. They've pushed back a bunch of the inflation data now from the Bureau of Labor and Statistics for September and October as well. So there is grounds for the Fed to not go and wait till the data comes through. But even if we got 25 basis points now, I still think there's all of the upside is definitely sort of priced in. So, it'll be interesting to see how the market reacts once we get to that. On Thursday. So we have the RBA meeting today. A bunch of small numbers from I think some building approvals or whatever. But the SPI was off about 0.27 overnight. Not much really going on overall. And we were mainly off. The Dow, the S&P, and the Nasdaq were off around about 0.45 to 0.25 overnight. So, and we were expecting a Bank of Japan meeting today, which won't be, or very unlikely to happen given a 7.8 on the Richter scale earthquake in Japan. So that sort of very much disrupted, put into question what's going to be happening in Japan today in terms of stock market opens, etc. So Broadcom was up about 3%. Microsoft's potentially moving its chip design from Marvell to Broadcom. There's some earnings coming up for some of these chip makers in the coming week as well. Nvidia was buoyed by the fact that they're going to be able to sell H200 chips to China, but the government's going to clip them for 25%. Which sounds really severe, but truth be told, I mean, these guys don't pay a lot of tax anywhere in the world, so it's not really, they're probably just going back to where everyone else has to pay, truth be told. So Micron was up again. It's been quite volatile, that stock, up about 4%. There was no major news there. Netflix proposed $72 billion merger with Warner Brothers, which was looking like a lock, is now been gazumped by Paramount. They've raised competitive concerns and regulatory concerns around that as well. Paramount actually rallied on the back of it, whereas Netflix with their bid was actually frowned upon for their bid, and saying that it wasn't that much of a value add overall. Netflix was down 3.4%. Google drifted off 2.35%. Microsoft up 1.6%. Despite there being criticism around Microsoft failing to monetize the AI and getting to market too fast, and providing what a lot of people are calling a fairly dodgy product, and highlighting the fact that Google is doing a little bit better. But that's just an opinion piece, and we'll see as earnings go on over time. But as you can see with this market map here at the moment, largely pretty red, except for Broadcom, Nvidia, Micron, and Microsoft, to be honest. So everything else is fairly red. So Tesla was down 3.3. There was just a broker upgrade there. Sorry, broker downgrade. Can't remember the name of the broker, but basically they said that even if robotics and fully self-driving taxis went well, that they're still expensive, and we'll agree to disagree on that, because I don't think they've really, taken into account how gigantic those markets can be. So Adobe we've got on Wednesday, and then Broadcom on Thursday. Both of those, I would imagine, will come out after the bell. Broadcoms may slip through the cracks if there's any sort of anything unexpected from the Fed. We've got employment later on in the week here in Australia. Job openings tonight, which will be more important than usual for lack of there being any other data. It's quite concerning how delayed this data is now. I mean, we're at least a quarter behind, and realistically, we're only shut for 40 odd days. Whether that's whether there's inflation being shown in these numbers and that they're dragging their feet on purpose, I couldn't tell you, but it seems a little bit suspicious that we were away for the government was shut down for 40 days, and here we are, very delayed in terms of getting caught up on a bunch of different economic numbers. So as I said before, I wouldn't be surprised to see the Fed on the grounds of saying, well, we need to see more economic data, maybe flag some dovishness, but not give a rate cut. It'd be very unlike them to deliver a rate cut on spec, but the market is absolutely convinced of it now, and political pressure coming from the White House makes it pretty ordinary for them, situation for them to be in to make a decision. So, I still believe that PCE at 2.8, despite being slightly better than expected on Friday night, it's still a hell of a lot closer to 3 than it is to 2. And I still think there's significant signs of inflation that could that are only going to have petrol thrown on them if they cut rates and they continue to be dovish. So it'll be interesting to see what goes on there and whether the Fed is responsible and does their job and doesn't bow to the pressure, or whether they take a speculative bet, which they're not supposed to do. You can probably just see here as well, these rate cut expectations mildly reversed a little bit in gold and silver overnight, down 0.5%, down 1%. Copper drifted off as well, but it's been having a pretty solid run. Crude was down 2% overnight. There was some key Iraqi oil fields that were reopened, a little bit ahead of schedule, and there's still some uncertainty around how slow the pace of the Ukraine peace talks are going. So, who knows what happens there. Iron ore was off slightly, down 3% for the last 5 days. Coal's still drifting a little bit higher, but I mean, those two, I've got to say, have been largely very, very quiet for a long period of time now, stuck in the range. Lithium was up a couple of percent. Uranium took a breather, but up 8% for the week. Bitcoin up 1%, but up 6% for the week, making a little bit of a comeback. It's a great call there from our guys here on the low there in Bitcoin. Currency's largely irrelevant overall. So in terms of the day ahead, there's very little corporate news. There's a bit of a research point out from one of the big brokers on copper today, basically saying that not being able to get Anglo American was a bit of a missed opportunity for both Rio and BHP, and being quite bullish on copper. I think it was ANZ, and there's signals of a policy support, from the Chinese as well, which is going to push copper up as well. So that should be pretty good for iron ore, and that. If copper and iron ore do well, that's going to help a very large chunk of our index as it stands. So, and then another small bits of news. ASX equity is fairly valued according to Morningstar. Morningstar pretty good on the value stocks, but horrible on the growth stocks generally. Very behind the times. And that really, I think, and there's a new director at Lottery Corp as well. So. Not much. Everyone's on hold until we see this Fed decision on Thursday morning. and I wouldn't be putting on, I don't think you need to be making any significant decisions until that point. And look, if the Fed is dovish, I don't see the Christmas rally, any sort of Christmas rally, being derailed. To truth be told, there won't be any catalyst until they start. They'll get through Christmas, get through the holiday break, get into 2026, and then we've got the debt ceiling circus all over again, leading into a potential government shutdown in January 30. But until that point, the only catalyst really is the Fed that can stop this train. So it'll be, we're largely on hold leading into that. So yeah. So yeah, if you want, follow us on Spotify, YouTube, Apple Podcasts, Twitter, etc. At MPC Markets, the same handle across all those things, or you can get everything all in one package there with Mosaic, our new platform. Get a 1 month free trial with all of our recommendations. We beat the index across the board in all 4 recommendation services in the last 12 months by a decent margin. You can go to mpcmarkets.com.au/mosaic. Get all our content, all our podcasts, and all of the recommendations there in one place, and with that 1 month free trial worth a few $100 a month. So get onto that over and sort of check it out. But that pretty much wraps it up for today. We'll speak again tomorrow.